Good morning, everybody. It's Max. How's everyone doing out there this morning? 8:48 for me. It's kind of early. I'm trying to get this Defiance update on right as soon as the market opens, as soon as we have something to look at. Okay, well, let's see. Let's start here with this Defiance. Let's start with Triple QY. These guys sold this strike, the 19517. I know it's kind of a weird strike, probably one of those damn flex options. Let's actually look at it here. This is what they gave me. There it is. Sold short, 195,179, 108 times for $178. So it says 4NDX, so that's just one of those funny flex options. Anyway, we'll just put it in what we got. So that means these guys are that means they're going for $1.8 million today. So it'd be going to be a huge day. They made $1.8 million about a week ago on September 10th. They made $1.8 million. Had a good month so far. They've only lost twice, but one of the losses was $6.2 million on the second day of the month. It never fails. That amounted to, it looks like $1.23 per share loss just on that day on the earnings per share. We went from up 24 to down 99 cents. Well, anyway, we're up 90 cents on an earnings per share basis right now. Dividend estimate is $2.68, which would be 89 cents in old money. I'll probably take the old money down next month. Yield 89.64. The current extrinsic that's been captured so far is $1.40. We're a little less than halfway through the month, a little more than halfway through the month. That's where this number comes from. And then I just figure out what the yield is. All right, so now let's check out IWMY. These guys sold 599 options. These guys sold regular options with the regular strike price. They sold the 22.25 strike for $34.40. Let's look at what they did. See, they don't have the 4 RUT or anything funny. They just have the normal RUTW. Okay. In any event, these guys are going for $2 million. Think about that. This fund is only $125 million. They're going to try to make $2 million just today. Triple QY, on the other hand, is a $200 million fund, and they're going to try to make $1.8 million today. Think how much more profitable IWMY is on a relative basis, or how much more potentially profitable it is. What do I always say every day when I talk about IWMY? When I get to the chart, I always go up. It's the most volatile every day. It's either up, meaning it's either up the most or down the most. That's what you get with most volatile, whether you like it or not. So, but what else you get is you get on days like today where there's a lot of volatility, you get huge percentage captures. Okay, so look at Triple QY. They're trying to capture $1.8 million on a $200 million assets under management. Okay, that's right under a percent. It's 93 bips. Okay, look at IWMY though, trying to catch 2 million on 125 million. That's 1.64, 164 bips. Man, that's crazy, isn't it? That is crazy. People love this one. On my interview with Sylvia that never aired because I didn't record it. I need to get another one with her, but anyway, she said on there, people that there's some pro traders that like IWMY the best, probably because it yields the most, but she didn't say that. That's what my mind's thinking. And they beg her not to change a thing. They didn't even want an IWMY target fund. But this interview was back at the first of this summer, before or right as the target funds came out. She said people love it, and you can see why. This is the one that makes the highest yield. You have the most potential in this fund to earn a high yield, right? Okay, so what else should we look at? Let's look at USO. Where's old USO? I'll be kind of been blowing USO off, but let's see what we got going on. Now, USO, they sold options on the 13th that expire today, the 18th. They sold the 72 strike 1,600 times for $2. Okay, so let's see where we're at. The spreadsheet's not as automatic on USO and USOI, but we could just eyeball it. Okay, well, there we have it. We sold the 72 strike and we're trading at 71.41. Okay, so right now, if we had to buy it back, it would cost, well, not around, we're trading at 71.40. It would cost 60 cents. So we can go back to the spreadsheet. We could punch in 60 cents here just to see how we're doing. We're going for 320,000, and we would be realizing, even after having to pay back the 60 cents, we sold these for $2. So there's still $1.40 worth of profit. We'd be realizing $224,000, which would actually make us positive for the month on USO, positive 12 cents a share on the month. Now let's check out this old dividend estimate. Extrinsic per share it's saying it's 55 cents. Okay, and we're about halfway through the month. So yeah, I mean, this is still great. I think this still looks good to me. So I'm pretty solid on $1.09. Sorry I missed this one so much last month, but hopefully this month will be closer. So we'll say $1.09 on that one. All right, so let's see what else we had to look at. Let's look at the heat map, see what's moving in the ETF world. We'll look at some charts too. Really not much because everyone's waiting for the Fed announcement. So not much is moving. I do notice volatility is popping up again. Now speaking of volatility, I have a timing model that uses volatility as the to inform it for the inputs. 3 different types of volatility. But let's pull it up right now. See what it's on. All right. The larger red area is a longer term sell signal. The market has been on a longer term sell signal. Let me pull up the SPY. Okay, the market switched to longer term bearish on July 18th. So that's the bigger red box. Now within that, the shorter time frame has gone bullish several times within this time period. The most notable of which being around mid-August, August 12th, and the SPY did have quite a face-ripping rally on into early September. Then the system went bearish again, but then we had another little bullish counter trend where it switched to bullish, and the SPY went from 547 to 563. Well, anyway, a few days ago, both time frames switched back to bearish, or the longer time frame has been bearish. The shorter time frame is now bearish too. So, but it can't predict the future. It just looks and sees if professionals are putting hedges on or taking hedges off. Right now, they have hedges on. So we'll see. Like I say, everyone's waiting for the big Fed announcement later today. So we'll see. Let me minimize that. Okay, so let's see what all is moving. I have a separate yield max update, but boy, look at this. VIX is moving. Man, that's not a good look right there. VIX is up 8%. It looks like to me like people are getting hedges on in front of this announcement, whatever it is. So the second most up on the board is the Russell. Look at that, up 1.25 or 1.4. Like I always say, the Russell is either the strongest or the weakest on any given day of the 3 indexes, i.e. it's the most volatile. Now, well, look, we also have the 10-year bond blowing up. Now, this is yield going up, so that means interest rates are going up, today. They've been going down lately. They've been trending, interest rates have been dropping lately, but today they're going the other direction. See what else is moving. Other than that, the single stocks, in single stock land, there's really not that much moving. We got Amazon down a little bit. Coinbase down a little bit. AMD, single stock land looks like most everything's down. Okay, so now earnings, as far as earnings this week, it looks like I don't really see any that are any super liquid companies that I like to trade. So let's see if there's any earnings next week. It looks like earnings season is slowing down, but next week, Micron, MU, Costco. We'll keep an eye on that. I'm making a new report that comes out at noon every day, midday report, and it just covers the YieldMax stocks and the buffer report and all the YieldMax universe. But within that, I have several of the trades punched into option strat. This is one of the trades that YieldMax has on right now that's working out really nice for it. It's a JP Morgan covered call spread. So this is what a covered call looks like. And this would be what would be happening if my grandfather was still alive and he was doing this trade, or him and his broker were doing this trade. This is the old way of doing it, right? Now, this is the new way of doing it, the covered call spread. Okay, and what this means is it means you aren't capped on the upside. Right now, this trade is up $708 per contract. Okay. If it weren't for the call spread, it would be up a little bit more. It'd be up $875. However, it would be maxed out. Okay. With the call spread on, it's up $700 right now. And depending on what happens the rest of the week, especially if this Fed thing turns out great, and the financial stocks like JP Morgan handle it great, you wonder if it adds another 10% or something. So you can see how profitable these trades are. So that's JP Morgan. So they did a good job uncapping the upside on that one. Let's see what else they got. They also have an Amazon trade with uncapped upside. Now on this one, Amazon hasn't moved far enough to make the trade profitable yet, or the trade's profitable right now, but to make the trade extra profitable. But anyway, the upside's uncapped on that. Like I say, that'll be on a separate report. That's on the daily YieldMax report. Also on the daily YieldMax report, I'm predicting the Round Hill dividend. So it'll be a YieldMax and Round Hill report every day at the middle of the day. And I'm going to update my estimate for the Round Hill dividend. I'll make a daily estimate and track it just the same way I do on Defiance. All right, so be looking for that update, the YieldMax update, right around midday. All right, guys. Well, I appreciate you for being here, and I will let you go, and I will talk to you here in a little while. Thank you very much.